Hi, welcome to the ICLR Friday Forum for January 12th, 2024. This is one in a monthly webinar series hosted by ICLR, the Institute for Catastrophic Loss Reduction, Canada's leading source for disaster resilience knowledge. Each month, we present recently completed research related to ICLR's mission to make Canada more disaster resilient. I'm your host, Dr. Keith Porter, ICLR's Chief Engineer. Last time we brought you Becky Denlinger, Veronica Scotti, and Matthew Godso, who spoke about DFAA reform. Next month, on February 9th, Matthew Beaudreau will talk to us about designing a national flood insurance program in Canada. Today, it is my great pleasure to introduce Dr. Lars Powell, who will speak about evidence of the market value of hurricane resilience. That is, selling hurricane-resistant homes for more money. This is a small field of research, meaning there are very few researchers looking at this question, and I think it's very promising for promoting resilience investment. Think about when you are about to sell your house, you might invest in a paint job or some sort of remodel to increase the resale value more than the contractors cost you. Now, if the same can be said for disaster resilience, then ICLR and resilience advocates can urge real estate agents and brokers to recommend to their clients that the client invest in basement flood protection or whatever resilience measure as a way to make more money rather than just as a way to possibly avoid future loss. I find Dr. Powell's work so exciting that I imitated it, applying similar methods to earthquake retrofit in California. Let me introduce our speaker. Dr. Lars Powell directs the Alabama Center for Insurance Information and Research at the University of Alabama in Tuscaloosa. He is an expert in insurance and finance. Before he speaks, I want to give you our agenda. Our webinar will last about 90 minutes. Our speaker will present for about half that time, then I'll moderate Q&A for the rest of the time. Please feel free to chat your questions into the Q&A box, and I will try to pose your questions in the order that they appear in the Q&A box. If we have a lot of questions, I may only pose your first question, then move on to other people, then circle back to your additional questions. Our webinar is recorded, and ICLR will post the speaker's slide and a link to the video on Monday or so. So if you have colleagues who couldn't attend, please let them know. And now I will pass it to Lars. Thanks for speaking with us today. Over to you.
Well, it's my pleasure to be here. And before I fully dive in, I want to acknowledge one of my co-authors who's also attending. Sebastian Awando is someone whose knowledge of the statistics and econometrics is very deep, and he makes me look really smart, even though that's not always the case. Also know that we have two simultaneous disasters going on in Tuscaloosa right now. There is a tornado watch, which has all of the public schools canceled today. And also Coach Saban announced his retirement yesterday. So we don't really know if we're going to keep the wheels on in Tuscaloosa, but I'm going to be here until something happens and making the presentation. I'll also keep an eye on the Q&A box if something comes up that's in real time and worth taking a quick stop to talk about. You know, your interests are what I am here to inform, and I have a set of slides that we're going to go through to show you kind of what I think is important about this. The title of the paper and my co-authors are listed on the first slide. And one of the interesting things about this paper, or really this presentation, is that the paper's been accepted for publication at a journal, and usually our reason for presenting research is to get feedback so we can be helped through the publication process. So it's not altogether common to come back and talk about a paper again after we've published it. We say that the statute of limitations has run, but this is a great opportunity to talk less about what we did and why we did it, and talk more about what we learned and why it's important. So, but feel free, we're happy to take technical questions as well. Of course, this is about the IBHS Fortified program, and we can't start a presentation on that without making use of the video, where here we have two homes side by side built in their lab in Richburg, South Carolina. And one of them is built to the fortified gold standard, and the other is built to a common kind of Midwestern building code. And you can see that they behave very differently under 125-mile-an-hour winds that they create. And that's pretty dramatic. That they didn't know that was going to happen. To hear them tell the story of this, the roof blows off and goes up into the rafters, and it's it exceeded their expectations. But that's some pretty good evidence that fortified works. And more so, given that the work I do is generally involves insurance. I work closely with the insurance industry. We've got an advisory board. It helps us keep up with what are the important issues of the day. But one thing that I think is clear is that property insurance in particular has a problem that's looming just over the horizon involving climate change. Now, I have to put climate/demographics because I'm in Alabama and not everyone here believes in climate change, but also because you could have this same issue either way. We've got increasing losses that creates uncertainty and exacerbates the cost of capital and can make insurance that used to be affordable unaffordable until we get to a point where we actually have an economic feasibility issue that people don't have enough money to buy it. This is just an example of how this might change. So right now people have plenty of real disposable income, this green line, but and you look at the real expected losses without this exacerbating factor, and you can go through a number of years and people still buy the insurance, but at some point it gets to where they cannot. And when they cannot, I think we all know that that's when things start happening to the insurance industry and the business of insurance that could have some big unintended consequences. So we want to avoid that. Even if we don't have climate change, or if climate change doesn't happen as quickly as some people expect it to, we also see this issue of having, this is a map that shows the population this map just shows the coastal counties in the United States. And we have 128 million people, about 40% of the population, live in this 10% of landmass that's up against the coast. And generally these coastal areas have a lot more hazard risk from hurricanes, but also it just so happens there's some earthquake exposure in California and the coasts of North and South Carolina. There's hurricane exposure all the way around the Gulf of Mexico and all the way up the eastern seaboard that we've seen from historical losses. What we also know from observing Hurricane Sally, the first hurricane to hit since we've had a critical mass of fortified houses. This is a map of where all of the fortified houses were in Alabama. At this point, I think we had around just over 20,000 fortified homes. And this black line is the path of Hurricane Sally. So it came straight through and hit where a lot of fortified homes were. And there's some information that not everyone is aware of. It's fine to talk about it. They won't show the specific details, at least not yet. But I've spoken with people at the insurance companies that insured these houses during Sally, and they say the only claims they had from a fortified gold house was from a tree falling on the house. There were no wind claims. There were no shingles lost. There were no roofs coming off. from houses that were fortified gold, and the houses that were even fortified roof or bronze or silver had much less damage. The loss ratio that came out of it was actually a little bit lower than what's contemplated in the required or the benchmark discounts that I'll show you about in just a moment. So do people care whether or not a home is fortified when they buy it? There's a lot of things that people care about. Most of them are things like countertops and curb appeal. But if you look here, this is for a home in Baldwin County, and I did a keyword search for fortified and found 764 homes that say the word fortified in their advertisement that are for sale right now. I think there's a total of about 4,500 single family homes. I did this yesterday. So at that point in time, there were about 44,500 homes for sale in Baldwin County, single family homes, and 764 of them note that they are fortified, and people believe that they sell better that way. Not only do they list it as fortified, but here is an ad for a fortified house that's going up for sale. And you can see in the language down here, it says, this gold fortified 4-bedroom, 3-bathroom, single level house. That's not just saying that it's fortified. It says that it's gold fortified before it tells you how many bedrooms and bathrooms are in the house. That means that the real estate community is convinced that this helps sell a house, because this is what everybody's neighbors are talking about, is how much their insurance costs if you don't have a fortified house. Here are the benchmark discounts that apply to the wind portion of insurance premiums. This was part of a bill that was passed in Alabama in 2016, I believe, 2015 or 16, where you get it at least, so for a brand new fortified gold house, you get 50% off the wind portion, and then after the roof's 5 years old, that goes down to 40. And we believe that people care about this because it puts money in their pockets. It's actually it's not just the wealthy people in Baldwin and Mobile counties that do this, or even just the people at the coast, but almost statewide, the Habitat for Humanity group that builds houses for people of limited means and helps people with home ownership, they build all of their houses fortified, not just in the 2 coastal counties, but also in our wind exposed for severe convective storms, tornadoes and such in Tuscaloosa and Birmingham and Huntsville. They all build fortified homes because it makes the home more affordable. You have to be able to demonstrate that there's room and that a person can afford the house before you can build it for them. And if it weren't for them being fortified, then they would not be able to afford both the mortgage and the insurance. So that's why they started doing it. The other question that we asked that's interesting from, at least from a research perspective, and it's something I'd like to know the answer to, do people also value risk? So we look at this a couple of ways and try to tease out. This is something it's harder to measure, but from a risk perspective, do they care about saving money on their insurance, or do they also value the reduced probability of having to move out of their home? Anyone who's ever had a bad insurance claim and had to live somewhere else afterward knows that that's not a lot of fun. That's a big hassle. But as humans, we have this natural inclination not to value those things, at least not above things like countertops and curb appeal and vaulted ceilings, whatever it is these days. So as I mentioned, we use 2 methods, and in the paper, I assume the paper was distributed. We do talk about both of these methods. We don't make as much of a big deal over the capitalizing insurance savings, except that what we know is if people value risk, then the benefit or the premium that's induced from from having a fortified home could be larger than capitalizing the savings into the home as like the present value of future cash flows. So that's exactly what the first method is. This capitalization is an accounting measure where you use an annuity equation or a spreadsheet or whatever, and you say, what's the present value of the savings? And so to do that, we have to estimate what the savings are. And we talk about this in the paper. What we did was we took a actuarial filing from one of the larger insurance companies at the time, and this is the zip codes and the associated wind loads. You see the highest one down here, the purple, is about 80%, and that's for this most exposed area of Baldwin County and a little bit of Mobile. You can also notice that there's relatively high wind loads. This is Birmingham. That's Auburn. We don't really care what happens to them. But up here in Birmingham and the corner of Tuscaloosa, you see wind loads that are close to 40% because we have most of Alabama is still very much undeveloped and has sparse population. But in the places like Birmingham where you have a dense population, then it's important to think about that aggregation of claims. And this is a heat map. It's harder to tell the difference in the colors, but it's the same thing, just showing with darker colors, you have higher wind loads, but it's a little bit harder to read than the last one. So the main thing is at the coast, we're just going to assume about an 80% wind load. The other way we can get at this is there's this, the Alabama Department of Insurance has a homeowner's premium comparison tool where you can look at a home with a $150,000 replacement cost and check the premium with wind and the premium without wind. This is back in 2017 or 18 during our sample. We took the average of all the companies that offered both wind and non-wind premium, and it comes out to be the wind load is just over 80%. We also did a survey about the same time as we were doing this paper. We did a survey of people at the coast to find out what they thought about Fortified, but we also asked them about their insurance and came up with an average savings if we take the 40% or the 40% for gold discount and apply that to the average insurance premium, came out to be about $930. And then we took a weighted average of the different types of fortified designations. So multiplied by that were bronze, silver, and gold, and multiplied them times that savings. The average is $875. The average interest rate for home mortgages was 3.9% during our sample period, which is 2014 through 2017. And so the present value of future savings on average is $22,436. So we can keep that number in our head. Actually, I've got it written on a future slide, so you don't even have to write it down. But that's what we get if all people care about is saving saving on insurance premiums, and all that savings is passed through to the consumer. They fully acknowledge it cognitively, and if it's higher than that, then we could demonstrate they also care about risk. It's not necessarily that simple, and if it doesn't come out, it doesn't mean they don't. But that would be one reasonable way to infer from the data if that happens. The second way that we estimate this is using a statistical methodology that does kind of the same thing as an appraisal. It's actually the early uses of this methodology were for mass appraisals. When you've got a portfolio of homes that you own, you want to appraise all of them, then you use a regression model to find out which characteristics of the home affect sale price and by how much. And so it does mimic the appraisal process. There's a lot of people that aren't big fans of the appraisal process. Say, well, that's just one appraiser's opinion and you can manipulate it. But the way we do this, we take all of the houses that sold in the area and use all of them with in a very objective way. So the first thing to talk about in our analysis is the sample. We're only using data on home sales in Baldwin County. We started out trying to use the Mobile County data, but it was just a mess. There was missing at least one of the variables we needed for every single observation. So at the end, we wound up just dismissing Mobile because in this process, the most important thing is to make an apples to apples comparison. So we want to get rid of houses that are different, and we want to have, it's fine for the sample to be small. It's got plenty of power for what we're trying to do, but we don't want a bunch of unrelated homes, a bunch of homes that aren't the same and say, well, this one's fortified and this one's not. You want everything else to be the same when you compare them in the price. So it's not surprising. I think there's a total of about 80,000 homes, single family homes in Baldwin County that are owner occupied. I mean, they're not someone's vacation home. They're not a condominium. They're a single family freestanding home. So we wind up with between 2014 and 2017, only looking at arm's length transactions. That's also important because a lot of times a home will change hands in the process of probate when someone passes away and it goes to their heirs, or if it's reallocated in a divorce process, then you might see a really expensive home and it changes hands for $1, or it changes hands for some fixed amount for tax purposes. And so we only look at certain transactions that are legally identified as being a market-based transaction. And the last filter we have is that at least one fortified home must have sold within the subdivision that a house is in before we include it in our sample. So once we do all of those and some cleaning for missing variables or missing observations, we wind up with 1,054 properties in our sample. And it's a lot less than 85,000 or 80,000 of the total, but we think it makes a much cleaner comparison because we're looking for how much more is a fortified home selling for. Among those 1,054 houses that sold, 235 of them were fortified. And of those, I think one was silver and 17 were bronze. So the vast majority were fortified gold. That makes a lot of sense. Although we've had maybe 7,000 of the fortified homes in Alabama are retrofits, people don't usually spend the money to retrofit their home if they're about to move out or if they're about to sell it. So most of the homes that we saw being sold were new houses that had just been built to the fortified gold standard. And we didn't observe any of the fortified houses selling more than once, or a house that sold before it was fortified and then sold after. That would have been a great way to differentiate, but none of that occurred in our data. On a map, these are the black dots are our traditional homes. The red dots are fortified homes. The dots are large enough in relation to the map that you can't see all of them. So that represents 1,054 homes, but you can't see quite that many dots. The thing that you'll note is that across the sample, we've got some homes that are further inland and some that are right on the coast. The blue lines, one of the things we control for is how far away from the coast is the home. And these blue lines are our representation of the coast. So they're just coordinates, and we tried it two ways. So some of the insurers consider the coast to not go into Mobile Bay, and some of them consider it to go into Mobile Bay. And so we choose the closest example of a coast that is on the ocean side. So if a home is here, then the coast is going to be at the barrier island. If the home is up here in Fairhope or Daphne, it's going to be the distance from the coast that comes around Mobile Bay. But that's a big part of our methodology, and I will try not to run you down with our methodology too much. It's a very important part of the paper. It might not be as important to you, but it's something to note. Our methodology is, we start with a standard, what's called a hedonic regression model. Hedonic, how much you enjoy life. Hedonism is where the term comes from, but it's just observing how prices differ based on their characteristics in a regression model. And the dependent variable is the natural log of sale price. We take the log because that makes it fit on a graph better. It makes it behave a little bit better for statistical purposes. And then we've got a set of explanatory variables, some house characteristics. First is whether or not it's fortified, how large it is, the square footage, the age, the number of bedrooms. Turns out that the number of bathrooms is highly dependent on the number of bedrooms. So instead of having both bedrooms and bathrooms in the model, in which case neither of them shows up as much, we have bedrooms and then bathrooms per bedroom. And that turns out being the most information we can get out of those two. Whether or not it has a fireplace. I'm told by my friends who study real estate every day that having a fireplace indicates that you have a higher quality of building because it takes something to do. Got the lot size, the type of siding, an estimate of the condition, which was kind of a weird variable because it's recorded by humans, and the way they did it didn't make a lot of sense. If you looked at the paper, then we had to write around that a little bit because the best condition homes didn't sell for more than a standard condition home, which was kind of weird. Also, whether or not you had a swimming pool. The other thing, of course, we know that location and location and location are the most important things in a home's value. So we consider what subdivision it's in, also what school district and what census tract, and also the distance between that home and the coast. The distance between the distance to the coast, we interact with Fortified because it makes sense that the homes closest to the coast would get the most value from being fortified. They'd also have the most expensive insurance. So there's the biggest opportunity for there to be value from the insurance discount. This model, we write an equation that shows where this interaction term, the fortified times distance to the coast is, but the main point of the model, the thing that matters most is this error term. And when I talk to my friends in engineering, like Keith, they think of an error term as something that's really, if you're doing an experiment in physics, your error term would be very small or negligible. If you had an error term, it might be a big problem. In economics, the error term is where the money is. That's the thing that you're trying to make sure it behaves. Most of the process of choosing the correct empirical model is to deal with issues you find in the error term. So we pay a lot of attention to that. I'm not going to make you suffer through the whole idea, but one question that we frequently got was distance to coast would also pick up whether or not you're beachfront, which of course makes a home much more valuable. And of course that's correct. And so what we were able to do to acknowledge that and to determine that it wasn't biasing our results is we could look at all the homes that were closest to the coast by our measure. And what we found is in every case that there was a home that was oceanfront or beachfront or bayfront, there was both a fortified home and a standard home relatively close to each other, except for in 2 instances. And it's kind of nice to have a small sample when you have to do something like that by hand. And whether we dropped those 2 instances or not, it didn't make any difference in our results. One of the things that was enjoyable about this project that doesn't always happen, we started this in 2016 and ran the first estimates of it. And then that was actually released at the White House during the Obama administration, where everybody was all championing resilience, and then kind of went a different direction. for a while, but we made this much more complex. We considered a lot of other things, and almost no matter what we did, it was still about a 7% increase from having a fortified home, which means it's a pretty strong result. The results, this is the results table from, or part of it from the paper. The difference between the estimates in column 1 and column 2 is that column 2 controls for the school district that the home is in. So that's a better model, but it's the direct marginal effect is what we report. It's 0.069 and 0.071 in the better model, so about 7%. A lot of people have asked, how do you get this 0.071 from these other numbers? Well, fortified is in the model as an indicator variable, as a 0.1, and then it's also multiplied by distance to the coast. So we use this equation down here at the bottom because the home sale price, we take the natural log of it before we put it in the model. We have to undo that with an exponential, and then the beta here for fortified is 0.143. Then we add the beta for the interaction term, which is negative 0.02, and we multiply that times the distance. And what we talk about most of the time is the median distance. You got to choose somewhere to average out the difference in distance to the coast. And so that 7% is at the median distance from the coast. Oh, and I had a nice red box around my result there. As I said, we did a lot of different methodologies trying to make sure we got this result right. Nobody wants to believe you if you only do it one way. So all of these different models are different ways you can address patterns that are found in the error term. And they all do things slightly differently, but what we find is on average, it's still about 7%. The prevailing wisdom of the day is that this OLS fixed effects model is the best way to go, but we'll use whichever one you want us to. They all come out about the same. These others take into consideration the differences in distance between the houses themselves in different ways. So it's a spatial error. Another thing that's really interesting is this value that we find at the minimum distance to the coast. So the ones that are closest to the water have the highest premium. And you see here it goes up to 15% for the houses. The closest house to the coast in our sample was under 1/10 of a mile from the coast. And it says a 15% benefit or 15% premium. And again, that's a pretty big sticker shock. That's not a small thing. And one of the things we like to do in research is not just sit around in our faculty offices and pat ourselves on the back for being so smart. We actually went to the market and we talked with people who were real estate agents. And indeed, my favorite one down there is this guy, Leonard Kaiser. He's on our on the board for our wind pool. Super nice guy, tells the best stories ever, but he also sells a lot of houses that are right on the coast in Orange Beach and around Baldwin County. And he tells me that in his experience, the premium for it being fortified is closer to 20% is what they're actually seeing on the street. So he has no problem with accepting this idea that there's a 15% benefit right at the coast. He says that it's probably actually bigger than that. The other thing that comes up is, okay, if you've got a distance to the coast and at the median, it's the median distance is 3.8 miles, the mean distance is 4.5 miles. If it's a negative coefficient, then eventually you get far enough away from the coast and it's going to go to 0, or by the model, it could even be negative. We don't think there is a way that a positive benefit like this would be negative. I don't know how that would work. But so is there a 0 benefit to having a home that's fortified if you're in one of our coastal counties? I would argue that no, there isn't. It's just the way this way that we address the distance from the coast in this particular model implies that that could happen. But when we go back and do things differently, we don't just control for what neighborhood a house is in or what census tract, and not the distance from the coast, because you assume within a given neighborhood, then you're all about the same distance from the coast, and you're just comparing fortified to standard houses. And what we find is that the benefit rarely gets below 4 or 5% in terms of a premium for being fortified. And this is good. This is, if what you want is more fortified houses, this is a good thing, because the cost to build a fortified house, especially a brand new house, is less than 2%, is what IBHS is telling us. That if you're building a new house, most of the new houses being built in Baldwin County are fortified, at least fortified bronze. That's the supplemental building code in a lot of these communities, is fortified bronze, and some of them, the very edge of like the beach towns, the building code is fortified gold, which is part of the explanation for why we have like 45,000 of the 52,000 fortified homes in the country. What's next? So we talk about these results in a big way. If we've got about a 7% positive price differential, the average sale price for a fortified house in our sample was $299,000. So the average benefit of being fortified is about $20,930 on average. And remember, I said that we could compare the first method we did, where we got the 22,436, this other one, and if method 2 was higher than method 1, then we could say people clearly have a risk preference that goes above just the preference for reducing your insurance premium. We don't find that. I'm not really surprised. I've done a few projects like this and find very few people, when they're making a big purchase, actually admit to caring about risk things. What they want is the location they want, the color they want, the countertops, the floors, the number of bedrooms. Those are the things people think about. But it's still encouraging from our perspective that these two numbers are somewhat similar, because it means that there's not a big measurement problem in our model. So the last thing I want to talk to you about before I take your questions is just setting this up as to why does this matter? I mentioned at the beginning of the presentation that property insurance has this problem, this climate change problem or demographic problem if you're in the southeastern United States, outside of certain cities, then where we don't talk about climate change. So I was asked to give a similar presentation at the institutes for the folks that do CPCU and all of that, and this was well received. I think it matters to everyone in the insurance business about what can insurance companies do to improve resilience, because climate change is not the insurance industry's problem to solve, just insuring stuff that's affected by climate change. And I'm close to running out of time, so I want to just hit the highlights here. One of them, and we've started doing this in Alabama, it was actually mandated, but it didn't get a lot of pushback because there's no sort of subsidy in it. Provide coverage that rebuilds stronger. Imagine how many times houses have been knocked down by a hurricane or a tornado, then rebuilt exactly the same way, so they're still vulnerable. Yeah. In Alabama, insurance companies have to offer an endorsement. They don't have to, the consumer doesn't have to buy it, but they have to offer an endorsement so that you can rebuild to the fortified standard. And I think on average, the price is around 3% of the insurance policy price, but it's relatively inexpensive, and the insurance companies are allowed to price it so that it's profitable for them. And the other thing that I think is really important is the insurance industry has an opportunity to incentivize performance construction capacity. The hardest thing that we do, and I'll mention the Smart Home America is a group that I'm very fond of. They're on the ground trying to get states and communities to build fortified. And I'm on their advisory board. I think everything they do is great. They, when they try to bring fortified to a new state or even a new county in the same state, what they're told is there's nobody here that knows how to do that.
Mm-hmm.
And they have to be trained.
Mm-hmm.
We've trained a large number of both inspectors and contractors to build fortified in Alabama, but it wasn't until we had this insurance discount and people started asking for it. So one thing that insurance companies can do is when they're choosing the contractors that rebuild for them, you can require, in some places you can't, but in some, largely you can incentivize, say, 3 years from now, we are only going to pay claims that are fixed by a contractor that is certified by IBHS or whoever the local jurisdiction is, certified to be able to build these fortified homes. Because this is a solution. This is not, we've seen that it works, and that it does a lot of really good things. So this doesn't really cost the insurance companies. I mean, it might not be super easy to do because there's always this tension between contractors and insurance companies, but to incentivize, say, we're going to pay maybe a little more, we're only going to do business with the contractors that are able to build fortified, then you've got this natural source of capacity when the above code the movement comes to your state, then it's already built there. That's the biggest biggest thing that we face. And the last thing I'll just mention briefly, and I haven't watched a lot of TV in Canada, but I assume it's similar, that every insurance television commercial is goofy. We've got Jake from State Farm and Flo from Progressive and all this. And whenever I'm in a state capitol talking to legislators about how they should treat the insurance industry in a way that lets them be both strong and profitable so they can serve their constituents, they're like, you mean those goofy people with the cartoon advertisements that they struggle to take seriously? And one of the things you could advertise, not necessarily fortified, but advertise resilience. I think back to when the Hartford used to have these great commercials of that big stag that's dashing through the woods. It looked strong, it looked powerful, it looked legitimate, and it wasn't mayhem crashing a car in the parking lot, or Jake from State Farm seeing someone's car run up a telephone pole. And I'm sure that those commercials work really well, but it'd be nice to work in something about, hey, we do all this great stuff so that you have fewer losses. That would at least make the folks working in government affairs and trying to make it so the insurance company can keep the lights on, that we aren't just this kind of clownish industry that tries to do anything we can to get people's attention for 30 seconds in between a timeout during a sports event. So I'll stop there. I think we're right at the time that we want to be, and that was my last slide. And would love to. I mean, I'm a recovering professor. I haven't taught classes. I've been running this research center. I haven't taught classes in several years, so I'm always surprised when anybody cares enough to ask something. But I also love to hear myself talk. That doesn't go away. You can be out of academia for as long as you want to, and you'll still do that. So ask me some questions. We'll talk about it. What you got?
Great. Thank you so much, Lars. It's a terrific presentation. We have, there's one question from an anonymous attendee, but I got mine in first, so I want to ask you my question first. When I've spoken with real estate professionals about your research and my subsequent research, and one or two others that came before either of us, they object when I say, well, all of this empirical research shows that these resilience features they increase the resale value. And the basis on which a couple of real estate professionals have pushed back is they say, well, that can't possibly be. They say the multiple listing service, where homes are first posted for sale, it has no field in its database for, in my case, seismic retrofit, in your case, fortified. It just appears in the text. There's no checkbox. So therefore, appraisers can't possibly include fortified or retrofit, etc., in the appraisal. And therefore, it cannot possibly be true that people are actually paying more for fortified or for seismic retrofit, etc. So have you encountered that pushback? How do you respond? Or how do you think fortified got into the price? Can you put that in a way that will be convincing to a real estate professional?
Sure. And yeah, I love that question because yes, it's been asked of us. One thing we learned early on was that if the real estate community wants something in the MLS, they can put it in there. So in Alabama, the MLS includes a field for fortified, and the appraisers can check that box and use it as a comparison item. In 2018 or 2019, we got together with the Home Builders Association of Alabama for their continuing education conference they put on, and they do it in 5 different places across the state. And they actually let me come in and give a very similar talk to this to all of the appraisers and contractors and real estate agents that have that sell houses and that appraise houses in Alabama. And what I learned afterwards, it was pretty well received, and we had just a basic 4-page description of the study that was on our website. And a lot of the appraisers would actually take our study and staple it onto the appraisal and add 7% to the home value in the appraisal. The other thing I learned is that the appraisal matters, but it's only binding if you don't have any equity to put into your home. So if you're buying your first home and your down payment is 10 or 5 or 20, but whatever's the least you can put down on the home, then the appraisal matters for what you can pay for it. But the only people the appraisal matters to are the banks. So as long as you've got equity and you're putting it into your house, it's only binding when you don't have the money to pay it as the buyer. So if you're selling one house, taking the money you made above what you owed on it and buying a new house, and that's more than 20% of the value of your home, then you can pay whatever you want to for a house. We actually had a model that only allowed the price to be affected by houses that had already sold. And we still had pretty much the same result. But when we were trying to get the paper published, they said, well, why do you care about the appraisal? That's only binding in certain situations, and it's not very common. So what I tell you is that we had a really good relationship and interaction with our home builders and our appraisers. You see, one of the authors of our paper was a good friend of mine. I went to grad school with a guy named Harris Hollins, who unfortunately passed away in 2018. But he was on the National Board of Real Estate Appraisers and helped us push. It wasn't an easy lift, but indeed, when you have a contact who can get you in front of them, then they all want the houses to be more expensive, right? The agent gets paid based on how much the house sells for. So yeah. There's certainly ways for it to work in, and there's not a good reason to not have this in your MLS. All we had to do was ask them. In most places, the MLS is run by the local real estate association. So you ask them to put it in there, they put it in there. It's not hard to do.
Cool. That's great to know. All right, now I'm going to ask you a question that an attendee asked. The first anonymous attendee said, are you working with IBHS to spread this information?
Yes, as much as we can. As I mentioned, we got to go give a road show with, of course, IBHS gave us the data on where the fortified houses are. I see them Frequently, I'm with them at least once a month somewhere. They have an office in Alabama and full-time people that work here. We've got so many of the fortified houses, but one thing we did back in 2016, we came up with a coastal insurance buying guide because prices went up. That's the whole reason our center exists, is because insurance prices went up and the governor said he would fix it, and then learned that it's complicated and nobody knew what the real facts were. So we wound up starting a center at the university so that they could have good information. So we made this coastal homeowners insurance buying guide. It's on our website, but we also had it printed out, and we've shipped just over 50,000 of those in the last 8 years to realtors at the coast, and they love it. Because one of the questions they frequently get is, I've heard the insurance is really expensive, and we give them this nice little glossy handout that explains what fortified is, what insurance is, for homeowners insurance, for flood insurance. And then in the back, there's a little spreadsheet, a little grid where they can compare across companies. One of the things we've noticed is that just shopping around, depending on who you're with, you could cut your premium in half. And it's very common that someone complains. In fact, every time I've been called, and I've been in this role in kind of 2 different states, that they like to send consumer complaints to me from the regulator. And whenever someone has had this big problem with insurance and they couldn't believe what their insurance company had done, they shopped around and found a better deal than they had before. But they don't want to because they really like their agent. I go to church with my insurance agent. I know they're doing the best they can for me. That's usually the first lie they tell of the day. And it's not that they're not lying. They just don't realize that it isn't true. They've got somebody says, "Oh no, this is the best we can do for you," and it's not. So shopping around can do a lot for you. But yes, this guide that we've distributed at our own expense, because that's our mission. Well, we would love to have sent out 100,000 of them. We only send them when someone asks for them. Just got a request for them last week. We sent another box down to someone in Gulf Shores.
Cool. Thanks. Jennifer Gardner says, "Hi Lars, great presentation. Obviously, this is my favorite topic. Have you spoken to home inspectors about data that could support a resilience study in markets outside of Alabama? Home inspections similar to the appraisal would only be necessary if there's a mortgage, but it's prudent to have an inspection even if you're paying cash."
Okay, so to have inspectors be on so every home that sells is likely to have an inspection. That's a way that you can touch more people, and that's not a bad idea. I don't have relationships with the inspector community, but I like the idea. I think also every transaction has a realtor involved. Well, not every single, but 90-something% of them have a realtor involved. And that so far that's been the low-hanging fruit. I understand that in your experience, Keith, that's been harder to do, even though one of your children is a real estate agent or knows so. So anyways, that's, yeah, it's not so one of the hardest things that we have to do in any movement where you're trying to get people to behave differently is find an opportunity to get them to listen to you. What we found worked really well is everybody has to get these continuing education credits. And if you can send somebody down there that doesn't fall asleep while they're talking, then they tend to listen to you. I don't know if you ever had to get continuing education for anything, but it's usually one of the most miserable things you have to do in a professional. Like I was an insurance agent and claim adjuster a long time ago, and it was never good. It was like going to a traffic school when you're trying to get out of a ticket. It's that bad. So yeah, it's a big opportunity with the CE, but no, we're happy to tell anybody about it anytime that we can. Well, one of the things that I know Jennifer knows because she was there. is we've taken a lot of legislators and regulators to watch the simulations at IBHS in Richburg. And yeah, getting to see it with their own eyes is a big thing, but the legislators can be a huge force multiplier because they can change the way people are required to behave. They can make rules about when you buy a house and you have to sign all this paperwork. Most of those are from laws that have been passed that say you have to notify someone about lead paint. You have to notify someone about these other things that have happened to the house during the time. So the ability to share that information can really be made easier if a lawmaker gets involved.
And actually, that sort of touches on my next question. Alabama is a little bit unusual in the degree to which the state pushes fortified, right? There are mandates for discounts and so on. Can you tell us a little bit about how Alabama gets involved and what you think might be different in other states? I mean, how does being in Alabama specifically affect your valuation of 7%?
Sure. So the 7% I think comes from, the best we can tell is it comes from the savings that people are going to have on their insurance. So we don't think that would be different in other places that have the same discounts. Our discounts are based on commercial catastrophe models that are the same things the insurance companies use to make their rates. We're actually in the process of redoing that. Right now, we're making an RFP to have a catastrophe modeler and an actuary help us redo this. We're working with NAIC and their Center for Catastrophe Risk Excellence, Center for Catastrophe Modeling Excellence, to get this done. So it could change some. I don't know exactly what it'll be, but we wanted that. It hasn't been revisited since 2016, and we want it to be a very transparent process. Now, I'm starting to answer a question that's different than the one that you asked. So what is about Alabama? How are we able to get this? Because we don't think of Alabama as this avant-garde progressive state that's going to be out in front of everybody in anything except football, which we do very well. And so what happened, two things were really important. Number one, we had a regulator in Jim Ridling, who was our previous insurance commissioner, who earned the respect of the insurance industry. He had been an insurance executive himself. Our current commissioner, Mark Fowler, is very much cut from the same cloth, someone that's not trying to better their lot by serving a specific constituency as a regulator. And the insurance industry was willing to go with him when he said we need to have these benchmark discounts. The other thing is we've got just under 5 million people living in the whole state. So when Florida decided they were going to do something about their insurance, they've got a huge problem. We've only got a tiny bit of our populations at the coast. Their entire state's at the coast. They said you can't sell insurance here unless you do this, 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 and this. If you have to, we're going to have really heavy-handed rate regulation. California can do the same thing with earthquake. Well, there's 40-something million people in California. And like I said, we've got less than 5. So if we said you have to do this list of things before you can sell insurance here, they'd be like, we may just very well not sell any insurance there. So it wasn't like we said, we didn't start out to say, let's do this a different way. We wanted to find a market-based solution, but we also had to find a market-based solution. There wasn't an opportunity to have a heavy-handed regulator come in and tell the insurance companies what to do, because we don't the carrot that you use in that is, if you want to write auto insurance here and life insurance and all these other policies, you've got to sell homeowners insurance. And if you've got a big wealthy population, then there's a lot of value there. If you don't, then you got to figure out another way to do it. And so that's the situation we were in. And when we found Fortified and we found loss mitigation. I mean, you look at what everybody else is, the states that are trying to address climate and demographics, this rising risk with price suppression. I won't name any states today, but there are certainly some states where they haven't approved a homeowner's rate filing in 5 years because the actuarial estimates show that it should be higher. So they just say, well, we're not going to approve it. And that's terrifying if what you want to have is an insurance market that will cover your citizens. But we don't have that opportunity in Alabama, so we had to figure some way that would be agreeable. And you can't, the only thing we have any control of is how we build our houses. And until you get that under control, and so now we've got almost 20% of the houses in Mobile and Baldwin County are fortified. Starting to make a difference in the cost of capital, the capacity that insurers and reinsurers have to allocate to the coast. My understanding is that it was good for our wind pool and for our domestic, not domestic companies, but our licensed companies that are selling insurance there, that it's become something they can use to negotiate with their reinsurance programs.
Cool, thanks. And the anonymous attendee says, my insurance goes up every year about 12 to 16% in the last few years. I talked with my insurer about retrofits I've done to enhance resilience, but nothing that I've done seems to reduce my insurance. How can I talk to my insurer? I've lived in my house for more than 25 years.
So the language and I suppose we probably have a lot of insurers in our webinar today, and I don't think anyone would disagree that if you want to get your insurer's attention, then you go get quotes from other insurers, even to the extent where the price optimization, some companies will charge you more if you don't look around, if you don't shop your insurance around. I don't. I pay a bunch for my insurance. I know I could get it decreased, but my insurance company has been there when I've needed them, and I like having that situation, even if I could save $1,000 or $2 a year. But if you're concerned about your price of insurance, shop around and find a company that'll give you a better deal, and the next thing you know, you become someone that shops and you get a better deal from everybody. If you're not shopping around, if you're concerned that company A, I won't name any companies, but a certain company won't change your premium, it's probably because they don't have that in their rates that are filed with the regulator. So you got to find somebody who does. And especially if there might not be one everywhere today, but this is the trend where everybody's using technology to make more granular insurance rates at a more specific locational basis, where your insurance could even be different from your neighbors by things other than how old your house is. Things like, is it fortified? Is it, what does it face away from the windows? Does it have a hip roof or a gable roof? All these things make a difference. And most insurance companies ask about those things in terms of what you can do. If you're not connecting the roof to the walls to the ground for wind exposure, then it's limited what you're actually doing. Maybe window shutters or changing out your garage door. If it's more of a retrofit for seismic activity, well, you're the expert there, but my understanding is there's a little bit more you can do in a retrofit for earthquake hazards or perils. But there probably is an insurance company that will give you a discount, and it might be that there's just an insurance company that would offer you insurance for 20% less, and you just haven't asked them to.
We think fortified roof is the only practical retrofit measure for fortified. The other things having to do with connections that are kind of covered by finishes, and they're hard to get at. I want to go back to a point you made a little bit earlier, very quickly. Um, you associated the 7% bump in, I think you associated 7% bump in resale value with premium reduction rather than some other thing like risk perception, if I got that correct. And I want to sort of probe that assertion. The the National Association of Home Builders, which is the U.S. version of the Canadian Home Builders Association. National Association of Home Builders has a group that it contracts to called the Home Innovation Research Lab that does economic research on their behalf. And in 2019, the Home Innovation Research Lab did some willingness to pay, or published some willingness to pay surveys of buyers. That's where they said, suppose, imagine that you're buying a house today, and how much more would you pay if that house had extra features that greatly reduced, flood risk or whatever? And they subdivided the responses by people who believed that that the home that they were buying is in, or that the home that they're in is a high risk place versus a low risk place. And what the responses came back with was that the median bump in resale value, or in willingness to pay, for people who perceived that they were in a high flood risk place was around $7,500, or at least over $7,500. And the survey did not mention insurance. It was just, you live in a place that has high flood risk. How much more would you pay to, greatly reduce that flood risk? I don't remember the exact wording, but it was words to that effect, which suggested to me that the bump in resale value was people's, it was basically peace of mind, or their, basically peace of mind. But maybe I'm wrong about that. And you've actually done surveys.
Yeah.
So,
Yeah. So we found something similar. We did a survey of people that live in multifamily housing, and about 75% of the respondents, we had a little over 1,000 responses, and about 75% of them said they'd be willing to pay something. And the average was maybe 2% more in rent to have a fortified multifamily thing. And one of the problems with that, as you know, and as I've written, is when people don't have to actually pay it and live it, then you don't know if you can put a lot of confidence in their responses. And there's a huge academic literature on this in the behavioral sciences that talks about it. But it is a signal. When you ask people, would you be willing to pay for something, and they say yes, that's better than if you ask them and they say no. Right. So there's some value there. And I believe that one of the keys, one of the main things we need to do, when I say we really, and I've I've said this to Roy Wright several times, and he laughs and kind of, who's in charge of IBHS. And I say, you need something that identifies homes as fortified homes, so that the people's neighbors can be jealous of it, and so that it's something that can be aesthetically pleasing in the house, a nice plaque, or something like a fire mark that used to be on homes back in the 1800s to say that you had paid your dues to the fire department, and so they should put your fire out if your house catches on fire, to have something like that so that your neighbors can be jealous of what you have. And that seems to, maybe it's just my Baptist upbringing, but that seems to have a big effect. Once you get some number of fortified homes in a neighborhood, then everybody else wants to retrofit their home too.
Sure.
So I think there's certainly something there. I think everyone would perceive there to be some value. And so what I was talking about in the presentation, we also mentioned in the paper that we we can't demonstrate this preference for reducing risk because there's not a good way to test for it. Doesn't mean it's not there. It just means that we haven't identified that effect in this analysis about about home sales. So it would be interesting to see someone do. We have all these experimental economists now, and they put people in experimental labs and say, and they can actually say you're going to get to keep the money based on the outcome of the wager you're going to take. And so people start acting as if they haven't, as if they would if they had to put money into their house. I don't know that's not my field of economics or psychology, but I'm told it could be done. I haven't seen anybody do it yet. I wish they would so I could read it and not have to do it myself.
Right. I'm curious to know whether Roy said, "Yeah, we're totally going to do that," or what his response was.
Oh no, well, he my understanding is, and I don't know if they were already doing this, and I just had a great idea that they had already had, because pretty smart fellow, and everyone at IBHS I think is trying to solve this same problem. And they started giving these certificates that come in a nice like leather binder or something that people can put wherever they want to inside their homes. And maybe I just maybe I'm just a skeptic or of people's behaviors. I really think that the reason a lot of people do the things they do is so that their neighbors see them doing it. I think having something on the outside of the house that demonstrates that your home is fortified would make that value even higher. But again, it wouldn't necessarily be for the risk reduction. It would be for the status symbol.
Yeah, I'm an amateur student of behavioral psychology, and there's a principle in behavioral psychology called social proof. People make a lot of their decisions based on what everybody else is doing. If the neighbors have some feature in their yard, and a whole bunch of neighbors have that feature in their yard, then you are more likely to have that, to decide to have that feature in your yard. We've seen evidence of that up here in Canada, and there's but the real evidence comes from social psychologists like Robert Cialdini. So I'm sure you're right. If there were a little thing that went out on the some sort of yard sign, and IBHS could say, or real estate professionals could say, 5,000 people in the last year have bought new fortified homes, that tends to be a very persuasive argument. Just, this is what everybody else is doing, so you ought to think about doing it. It is
from a little bit more of a positive outlook on people kind of angle. One thing we've seen is after a storm, after Sally, there were a lot of interviews that IBHS and Smart Home America went around and interviewed people that had fortified homes, and everybody else in their neighborhood couldn't live in their home, but the fortified home was still standing. So it became a focal point of the neighborhood where maybe the FEMA assistance would set up to pass out bottled water and generators because they've still got a roof you can be under and air conditioned that you can be inside with, which is of course very important along the Gulf Coast. And I think that from an altruistic standpoint, there are a lot of people that like to be able to provide for their neighbors in a catastrophe like that. And so I think that's another psychological advantage. And so they've put out, if you go to the Smart Home America website, they've got these videos online where they're interviewing people after the storm, like very, very recently after the storm, at their fortified home, and talking about their experiences. It's very uplifting, and it certainly suggests that people like more than just saving money on their insurance. It's just the how to measure it scientifically is a little bit harder.
Yeah. So let's talk more about the decision making behind the price. The empirical work is great, and it's really valuable to be able to say 7% bump or up to 15% bump. But it always, for a scholar, it always begs the question, exactly how did that come to be? And you gave a bit of an answer when you said, well, I talked to appraisers and they staple our 4-pager to their appraisal and they add 7% to that's this is the first time I've heard that. That's really interesting to hear about. Can you tell us more, what you've thought about who the decision makers are, for instance, and what they're thinking about, like particularly the builders who are building IBHS gold. Is that a small market is a small fraction of the builders? Is it a big fraction of the builders? Is it growing? Are they building, is it, do you find a builder who builds everything in their new development to be gold, or is it just, we're going to build some to be gold and some to be roof and some to be nothing at all? And are they bragging about fortified in their marketing? I'm just interested in the chain of communication that leads to somebody seeing, oh, this is a fortified home and I want to buy it and I'm going to pay more for it.
So we've got two mass builders, like volume builders at the coast. There's the Horton Homes and then Truland Homes build high volume. They'll develop neighborhoods, and when all you do is build fortified, of course, they absolutely advertise the fact that it's fortified when they're selling the home, but the cost is I was told that my friend Dr. Hollins told me that when someone's building a single family home, the material cost, about 25 to 30% of it goes to waste, just because they don't put it on the truck in the right order, and then you're cutting big boards into small boards. So you can't tell me that the extra material cost is an insurmountable thing. These volume builders are trying to be as efficient as they can be, and and that's not the case with everybody. I don't know. I can't imagine 30% waste, but there's room to do this. And they even say, okay, if you look at Xactimate or whatever it is, the software that tells you how much it costs to build a home, that lets you estimate these things, or to repair a home, it'll tell you that, well, you've got to buy this underlayment and this tape and the connections. But when you're building a new house, the cost is really a small percentage of the cost of building the house. And you could probably make up for it in other ways if you're willing to try to build the house in a way that's efficient, as opposed to try to do everything that try to meet all of your clients' requests. So yes, we've seen these two volume builders were the first movers, and their houses sell really fast, and they can do the fortified gold for less than 2% increase in cost for them. So what they were paying to do it without, and now what they're paying now, is very close, and they get this premium when they sell it. It doesn't take any longer because they've got that system down. A big thing that IBHS did, part of the fortified designation, is that their inspectors come out and inspect it, because there's a big problem in Alabama. Maybe it'd be less so in Canada, but we call it the inspector, the building inspector from the county or the city oftentimes does not leave their vehicle. We call them truck inspections. And they kind of drive up and they wave and, hey buddy, how's it going? They say, you doing everything good in there? Yep. Well, let me sign off on that. And they move on. And so part of the process was the insurance companies wanted good information and not just a better process for building. They wanted to know that you were using it. And at first there was a lot of pushback on that, because, oh, now we got another inspector we have to wait on. And one of our engineers, well, he's not at Alabama anymore. Andy Gredinger, I think, is at Wisconsin, Milwaukee now. But he said, well, couldn't you do this with a camera? Couldn't we make AI do these inspections for you? And indeed, now a lot of the inspection, and I'm not saying that it was because We suggested they probably had this figured out a long time before we did, but that was where we first got interested in doing an AI thing. They take a picture and you upload it to the IBH site from your phone, and they can inspect the picture. It shows where you're standing when the picture is taken, and you can tell from the picture if the nails are the right distance apart, and you can take a picture of the label of the box of nails that you bought. They have to be the ring shank nails and all these things. And so a lot of it can be done remotely without waiting for an inspector. And that was important.
Cool. Aaron Harding says, I wonder if property value for a neighborhood would increase if you were able to show that a certain percentage of homes were fortified. Your home is better protected from debris damage if the neighboring home is also fortified, right? It doesn't fall apart and it doesn't blow debris into your house. So some home value increase plus desirable neighborhood value increase. Do you have any thoughts about sort of the positive, uh, uh, the positive influence of a neighbors having fortified?
Well, it reminds me of the house from Hurricane Michael that was in wherever that was in Florida. I'm trying to remember which beach that was. Panama City Beach, I think. Everything was knocked down except this one house, and they show the picture. But actually, the house right behind that one is still standing too, because it was blocked from the wind by that loss mitigated house. So I think that the commercial catastrophe models have the ability to price that into a home's insurance rate. I don't know that they do. I would suspect that they don't. That would be an expensive way to underwrite houses, is the proximity. But I think it's a very interesting question, and probably something that we'll eventually have data to look at. Is if we know which way the wind is going to be coming from if there's a hurricane that affects Baldwin County, because they all turn the same way. So it's going to be going. Well, I guess it could. It's possible it could come from either direction, but you could probably estimate that. I haven't seen any estimates of it, but it's something that you absolutely could. I mean, I would feel good knowing that one of the main things that causes the envelope of a home to give way is some sort of projectile breaking a window, and it makes the pressure there. I don't have to tell engineer Keith about this. This is, it makes the roof blow off, but it won't blow off if you don't have the envelope breached by wind. So yeah, the debris field from a storm is one of the most is one of the things that exacerbates the damage for sure. So there could be some difference, and that would be without the fortified discount on your insurance. So it would, yeah, okay. So somebody was giving me a good suggestion of a way to tease out the value of risk from the value of the insurance. Thank you. That's great. Yeah, I think we can put a look at that.
Cool. Good one, Aaron. Let's see. I had a question, but I've lost it in my. Oh yeah. So fortified requires recertification every 5 years. Which, what is it, like $1,500 or something like that? It's not
It's
cheap.
a little bit less, but it's 1,500 is the estimated cost for a multifamily property.
All right.
That we talk about in the other paper. I want to say it's about 500 for doing the retrofit or the new construction, and then it's some percentage of that for the recertification. And I don't know if I want to, part of me wants to say, unfortunately, we learn more about building science every year, and one of the things that I think is coming in the near future is that we're learning some bad things about shingle roofs and wind damage. And really, you could make a compelling case from some of the latest stuff that I've seen laboratory tests. You know, the roof farm they have, the roof, the test roofs they put up in several parts of the country for IBHS, and then they go back and test the shingles every so many years. Now those are getting old, and they really start deteriorating after about 10 years to where they don't perform the same way, but you would expect a metal roof to get 30 years. So part of the recertification is, what if we learn new stuff about, and I think some people, I don't know what anybody knew or when they knew it, but we know that roofs deteriorate over time, and until recently, we didn't have scientific testing done that shows when it really goes from, because it happens pretty fast, once it starts to deteriorate, it deteriorates quickly. And so the recertification gives you the opportunity to change what fortified is. I don't know if they'll do that for the insurance prices. I kind of doubt it, but they're going to need to. They've recently, every few years, they update what's included in fortified standard when they learn new things. Maybe they find a cheaper way to get the same thing, or they find a little, like one of the things they learned was that if before you put tape on the roof deck seams, if you paint it with white primer and let that dry for an hour, then the tape sticks a lot better, and you get a better seal on that roof deck. And so they started having Fortified do this thing where they roll a little bit of primer on there before they put the roof deck tape on. So there's all these new things they learn and ways to make it work better. And I think the recertification process is an opportunity to take that into consideration in certification.
Awesome, thanks. And we're just about out of time. We have no additional questions. So Lars, I want to thank you once again. It's a great presentation. I've really enjoyed our conversation. And, you know, as I said before, I think this is a really promising opportunity to promote resilience. I'm going to remind our attendees, first of all, thank our attendees for coming today. I hope you enjoyed this one. Remember that next month on February 9th, Matthew Baudreau will talk to us about designing a national flood insurance program in Canada. So I hope to see you all there next month. Lars, thanks very much.
My pleasure. Glad to be here.
Bye-bye, everybody.